All right, welcome back, everybody. So continuing with our review of the annual report, I've got Nike's 10K up here again. So hopefully you're comfortable with finding your companies. This week we're going to be talking about the financial statements themselves. So if we go to the table of contents, we can see some of the things we've looked at. Item 1, business, and some of the basic outline to the company. Other things we're going to get into, we can see here, but right here, financial statements, page 94 of the numbered pages, not necessarily the PDF pages. So if we scroll all the way down there, this will take a second. Let's see, financial statements and supplementary data. All right, here we go. One of the first things we actually see is the report from the accounting firm, the audit firm. So these financial statements have been audited by an accounting firm that basically say they looked at it and they are reasonably accurate. So down here we see the statements of income, or as most companies will just call them, income statements. Statements of comprehensive income. Not every company will have that. That's sort of odd items. Consolidated balance sheets, or you might see statement of financial position, depending on what company you're looking at. That's another name for it. The cash flows, statements of owner's equity. All of these have useful information, but I want to start out with just looking at the income statement and the balance sheet just to get a feel for what's going on with this company. So we've got 3-year trend here. We've got 2015 to 2017. We can see that our revenue or our sales are growing from $30 billion to $34 billion. So kind of steady growth here. It's just 30, 32, 34. It's not, up and then down or down and up. It's pretty consistent. We can see the costs of sales, which can mean a lot of different things. Largely, it's going to be, your cost of your product, whether you make it or whether you outsource the manufacturing. It's that. Largely, it's going to be the cost of the product you make. So we can see that kind of growing in lockstep with the growth in sales. This is going from 16 to 19. And gross profit is simply revenue minus cost of goods sold, or here cost of sales. So those two things impact each other, and we see a similar trend with gross profit. We have many other expenses, either lumped in or separately down here. Our last line is our net income, or our profit of the company. So we can see that this is also growing from $3.2 billion to $4.2 billion. So basically they grew $1 billion in profit, which is pretty good. Here we're talking about $4 billion of growth on 30. So that's roughly roughly 10%, but here we're talking about 1 billion coming out of 3, so we're talking about almost in the ballpark of 30% growth, which is a lot, considering we're talking about the billions of dollars. So that's our income statement. So overall, this is telling us the operations of the business. What are the sales or the services we provide to our customers? What do they pay us for? What are we earning versus the expenses? What does it cost? And what's left over, our profit, and what is that doing? So we're looking at some pretty positive trends here. So we probably feel pretty good about this. Balance sheet. Let's start looking at it in big picture. So one, the balance sheet is spelled out in terms of the accounting equation. We've got assets on one side We have a total for assets. So sometimes these are presented top and bottom, or sometimes, like in the book, you might see assets on one side, liabilities and equity on the other. Um, it balances. The name means that the accounting equation balances, and our total assets are going to equal our total liabilities and equity. And what that means is basically this company has all of these things, and the other side explains, where did they come from? Did we borrow money? Is it liabilities and debt? Did we put in our own money um, as stockholders, or is it or are new assets generated from the profits of the business? So on this side, we're looking at liabilities, and then the two parts of equity. One is, what did the owners invest into the company? That's the value of the stock, the money they put in exchange for that stock. And then retained earnings is basically your lifetime profits less lifetime distributions. So what is left of those profits? Okay, so again, big picture, we got 2 years here, 16 and 17. We can see our total assets are growing. We can see that our current liabilities, which are the ones which we intend to pay off or expect to pay off in the next 1 year. Long-term debt could be anywhere from 1.5 years to 30 years. It depends on what the source is. Here we don't have a total for total liabilities. We have the total current liabilities. So one of two things. We can either add up these numbers and get total liabilities. You could take your total liabilities and equity and just subtract your shareholders' equity, and that would get you to the same place. So just by kind of eyeballing that here, we can see our total liabilities are probably about 10 or 11. Here we can see it's 5, 3, 1 plus some change. Let's call this 2. This is 8. That gets you to 10. Probably about 11 once you start adding them, or close to it. So we can take a look at those as well. So again, this is growing. Total assets are growing. Total shareholders' equity only grew a little bit, but that's not necessarily a bad thing. It could have, if it stayed completely flat, we could have a big profit, and if we paid out big dividends, those two things would net out in terms of equity. So again, we can look at the big picture. What do we have versus what do we owe and what's left over in terms of shareholders' equity. We can look at individual things. We can look at how much cash does the company have. We can look at accounts receivable, which is the amounts that are due to Nike. So like when Nike sells 1 million pairs of shoes to Walmart, they don't get cash at the time of transaction. Walmart might not pay for 60 or 90 days. So we recognize a sale, and we recognize money that is owed to us. That's what accounts receivables are. Inventories, we can look at what do they have tied up in terms of money that they've turned into sneakers, shirts, all of those things. Longer term equipment, property, plant, equipment. These could be anything from buildings, sales offices, stores, retail stores, manufacturing plants if they own their own. So we want to look at the big ones. We want to look at the important ones like cash, and just kind of get a feel for where has it invested its money. We want to get a sense for what are the liabilities, how big are they. Like we said, if there's about 10 billion in liabilities and 23 billion in assets, that basically means we have more than twice as much money available to pay off those liabilities. So they're in good shape. All right. I don't want to make this too long. So again, I just wanted to give you the overview of how you might look at this. I did write up some descriptions of the changes, but you know I think it might help to just kind of hear the thought process of looking at one of these, because if you've never looked at a financial statement before, your eyes might start to glaze over if you don't know what you're looking at. So again, if you are not comfortable with financial statements, again, just start with the big picture: total assets, total sales, total net income, total liabilities. Just we're trying to figure out, what is the scale of this company. Is it a horse? Is it an elephant? Is it a mouse? Let's get a sense of it. Here we're looking at a $23 billion asset company. Again, you want to look up here into the legend and see what do these numbers actually mean. So this is in millions, so that means any even single digit, like this little 6 here, that's 6 million. We get to, this is 300 million, this is 2 billion, now that we've jumped over past the comma here. So it's important to think of the scale too, because if this said in thousands, we'd be thinking about a drastically smaller company. And depending on what company you pick, that's what yours might say. So good luck, and I look forward to hearing what you see.